Luna Foundation Guard, aka Terra Form Labs, aka your boy Do1, just signed a deal to trade over $1 billion of Luna for Bitcoin. Why did they do that? What does it mean for UST? What does it mean for Luna? We're going to be talking about it right here. But for starters, welcome to Crypto Saver. Let's begin with the headline piece here. From what I can tell, this is kind of the official press release that was released by LFG. Based on their Twitter, they kind of linked to the blockcrypto.com. And the title here says, Luna Foundation Guard raises $1 billion to form Bitcoin reserve for USD stablecoin. Now, as a quick refresher for some of you, if you head over to LFG's Terra wallet, we can see that about a month ago, LFG was funded with 50 million Luna, just a month ago. Soon after, about 2 weeks later, we did see that LFG took about 20 million of that Luna and burned it to mint UST to replenish the yield. Well, now a good portion of it, of the Luna that they have, LFG, is now going to be used to trade over for BTC. Let's look at the quick takes here. The capital will be used to create a new reserve that can act as a release valve for UST redemptions during sell-offs in crypto markets. Now, we're going to be touching on this shortly. As we go below, it does say that LFG has raised $1 billion through an over-the-counter sale of Luna. Okay, so an over-the-counter sale, basically they agreed between themselves that we're going to trade over this much Luna for that much BTC. Now, as we scroll below, here's a quote from LFG. The reserve assets can be utilized in instances where protracted market sell-offs deter buyers from restoring the UST peg parity and deteriorate the Terra protocol's open market arbitrage incentives. The last thing I want to touch on here is what the president of Jump Crypto ends up saying, which is similar to how many central banks hold reserves of foreign currencies to back monetary liabilities and protect against dynamic market conditions. As that president of Jump Crypto mentions, this is not a new concept. And if we bring up actually just the definition from Investopedia, for example, it does say, what are foreign exchange reserves? Foreign exchange reserves are assets held on reserve by a central bank in foreign currencies. These reserves are used to back liabilities and influence monetary policy. Then there's an example here of how Saudi Arabia uses that. So Saudi Arabia also holds considerable foreign exchange reserves as the country relies mainly on the export of its fast oil reserves. If the oil price begins to drop rapidly, their economy could suffer. They keep large amounts of foreign funds and reserves to act as a cushion should this happen, even if it's only a temporary fix. To begin, we have to first understand, how does UST keep its peg to $1? Well, typically, let's imagine if the peg of UST drops to 90 cents, right? So 1 UST is worth 90 cents. Now, what people would do on the market here, they can buy that 1 UST for 90 cents. They can take that 1 UST, they can head over to Terra, and they could use the market mechanism in place where they would burn 1 UST and receive $1 worth of Luna. Now, notice the significance here. They did not have to spend $1 to receive 1 UST. They spent 90 cents to receive 1 UST. But they were able to burn it. They were able to burn that 1 UST for $1 worth of Luna. So in this case, what they would end up doing, so the person buys that UST, which creates buying pressure, by the way. They burn the UST. They mint a Luna, $1 worth of Luna, and then they would sell that Luna. And in doing so, they would make, in this transaction, for example, they would make 10 cents if they just had 90 cents to work with, right? Now, with this type of mechanic in mind, it's clear how UST tries to get back to that $1 peg, because if it's under $1, then people can utilize this feature here and just kind of, buy UST, burn it, mint Luna, sell that right away, and secure that profit. The same thing works in reverse, by the way, when UST is above $1, but we're not going to be touching that. But here's where the problem comes in. If Luna begins to crash, usually, people begin to panic. And that panic can lead to people leaving the Terra ecosystem as a whole. And if people are leaving the Terra ecosystem, they could be selling out their UST. And in doing so, UST can begin to trade below its peg. Now, as bots come in and they try to take advantage of this arbitrage opportunity, they would be coming in, they would buy a bit of that UST, and they would mint Luna, and they would sell that Luna to try to profit off it. But in doing so, they're actually only worsening the problem, right? Because if this whole sell-off began of people just selling Luna due to whatever other events. Well, now these arbiters coming in and trying to profit off it by minting Luna and selling it right away. They're even adding more pressure to Luna, right? And if people see that, that might even put even more panic in other people. Now, other people are selling their Luna and then also possibly leaving the ecosystem, and UST is even more off-pegged. On top of that, you might even get in a circumstance where if Luna becomes so volatile, specifically to the downside, the bots that are taking advantage of this opportunity, they might wait for a better opportunity than the one that's being handed to them. So, for example, let's go back to our example here. 0.90 UST you can buy, right? Well, the issue here is if you take the 0.90 US, so if you take 1 UST and you burn it and mint 1 Luna to try to make a 10 cents profit, what if by the time you get that whole transaction done with, Luna ends up trading even lower in price? If so, then that 10 cents of profit that you were trying to make, it's not going to be there. If by the time that you mint that Luna and by the time you sell that Luna, if the price of Luna fluctuates enough, you might actually come out at a loss. So during really volatile times, even the bots that are there to take advantage of this opportunity might wait for a wider spread to ensure the fact that once the orders are all sent out, now granted they do get sent out very quickly within milliseconds of time, but they want to make sure that when it does get sent out, they can make that profit. But they might have to wait for a wider spread. They might have to wait for USD to get depegged to 0.85, maybe to 0.80. It just really comes down to how bad that sell-off is. But I think now you're kind of understanding why this would be the Achilles heel of UST due to its relationship with Luna. And the longer that UST stays unpegged, the worse it is for Luna, because we're just going to be seeing so much Luna being minted and being sold, by the way, right? So it's not just being minted. The issue is not so much about Luna being minted. The issue is the fact that Luna will be minted and then sold so that the people can actually lock in their profits or try to get rid of their positions. So the idea behind the reserve is that instead of burning that UST for a Luna, you will have that option to burn that UST for probably $1 worth of Bitcoin. And why that matters in this example is when I just said earlier that some bots out there might not be willing to take the trade at a 0.9 UST because they're unsure that they could even get out of that Luna the moment they get it for a profit. Well, if you incentivize them and say, hey, listen, buy some UST, don't worry about burning it and minting Luna with it. Just buy that UST, burn that UST, and we'll hand over $1 worth of BTC. Now, these bots and other people that utilize this opportunity, they might actually take it upon themselves to use this. They may not have to wait for the unpegging to get that bad for them to feel comfortable about taking part in this. Now, let's go back to the article here. They also say that initially, the reserve is going to be denominated in Bitcoin, which they believe is less correlated to the Terra ecosystem. There are plans to stock the reserve of other non-correlated assets over time, although it's not clear. So this is just a beginning for them, right? They do not plan to just have 1 billion Bitcoin in there, and that is it. They plan to add more assets. But that also makes sense because if we look at if you look at the UST market cap right now, which I will bring up for us, naturally, we expect as Terra gets more popular, there is going to be more UST being minted as there's a demand for UST. So let's just focus on the purple line here. So we can see basically, some late October, we had this huge ramp up in UST demand and UST minting, more importantly, and it's been going up. Right now, we're sitting at around, what does this say, about 12.42 billion UST is currently out there in circulation. This deals for $1 billion worth of BTC. So obviously that's less than 10%. That would back up less than 10% of the available UST that is out there. But either way, as UST grows and there's more adoption of UST, if they want to keep to this ratio of 8.1%, naturally they're going to have to add in more assets into this forex reserve, as they call it. Now let's take a look at the actual vesting contracts that was set up, because as a reminder, this $1 billion worth of Bitcoin was traded over for Luna, right? And this was done of VCs. And if we bring up the wallet for Luna Foundation Guard here, and let's say we go to the first page real quick, we can see all these different vesting contracts here, right? You can click on it, you can look at the vesting contract for different amounts. And I do have an Excel sheet here of all the amounts within this vesting contract. Now, there's 24 different vesting contracts. We can make the assumption that there's 24 participants when it came to setting up this Bitcoin reserve. In total, nearly 19.5 million Luna was traded for $1 billion worth of Bitcoin. Now let's talk about the vesting contract, right, which is also available to us. So I've transcribed this over. So for starters, they have to wait 1 year before any Luna gets unlocked to them, okay? 1 year. After that, over the course of 3 years, the Luna will be unlocked to them linearly. And if we actually look here, what they ended up doing, they didn't just set up Luna in this vesting contract, they actually set up B Luna. We can also see here that the staking is set on true. So the investors are actually also earning staking rewards on the Luna that's being locked up away from them. So again, they can't get access to this Luna for 1 year, but after 1 year, over the course of 3 years, probably on a daily basis, they can actually draw from these contracts. Now, if you want, you could actually click on any of these contracts, by the way, and just pull the address right here to see exactly where that, well, in this case, where that B Luna would be heading out to. So that's one thing. If you just have nothing better to be doing, you could definitely just kind of like dig around and see that. So the big question is, what was in it for the VCs? Because the VCs are not here to make the world a better place, right? The number one thing a VC, a venture capitalist, will try to do is make money for themselves and for their clients, right? And as we bring up the Excel sheet, and you might have noticed this before, if we take $1 billion and we divide that by the amount of Luna that is going to be given to these VCs, we see that this comes out to an average price of $51.35 per Luna. And let me tell you something. When I saw that, I was so surprised. First, I want to clarify something. These vesting contracts began on January 26th of 2022, okay? Now, we can assume that they've been in talks with many of these VCs for at least, let's put it at least a month to 2 months, right? You would imagine, at the end of the day, like there's going to be still physical contracts that have to be signed about this, right? And different negotiations and so forth. Let's bring up the price of Luna here, right? Keeping in mind that the average price per Luna is $51.35. Let's bring up the daily chart and see what's going on here. So the smart contracts were created on the 26th. And if we head over to the 26th, we can see that the price of Luna on the 26th was about $62. But again, we know that all the actual agreements and the physical contracts were likely signed before that. So let's say they were signed sometime, in December. We did see that big run up, right? In December, Luna went, right here, Luna went from $51 to $100. Over the course of, I think this must have been just like, over the course of like 2 weeks, right? From the 15th, it was like the 13th to the 24th, it doubled in price from $51 to $104 that quickly. Now, the only way I can even imagine that these VCs signed this agreement is if they did it while Luna was all the way up here. Because at the end of the day, they're taking a massive risk, no matter how you view this, right? They're handing over an asset that they own right now, right? They own that Bitcoin. That's another thing to clarify. These VCs are not going out there and buying this Bitcoin right now and handing this over to LFG. No, they already own this Bitcoin. So they're handing over an asset that they already own for an asset that they can't touch for 1 whole year. And then over the course of 3 years, they'll be able to get some of that Luna. 3 years, okay? Massive risk. And again, personally, I think most people can agree that betting on Luna is a riskier bet than betting on Bitcoin, right? The risk and reward is definitely slanted towards Luna, but in terms of risk, it's definitely also slanted towards Luna. And this would be the only way I can imagine that they were able to agree for the fact that the VCs agreed for Luna at 51.35, because even looking at this here, like it did not take long. It took about a month for Luna to go from over 100 to, down to $42. $42, almost $10 below the price that the VCs agreed for. And that's in a month's time. That is in a month's time. Like when I saw this deal, what I expected was that the VCs were going to demand Luna for a price of around like $20. Like that to me seems like something that, that almost sounds reasonable to me, But the fact that they agreed on the amount of Luna that they're receiving, which equates to $51 a Luna, and they signed off on that. I mean, that, without a doubt, looks extremely bullish for Luna. There's just no other way to kind of slice and dice this, right? At the end of the day, the people with so much money, you expect these VCs to be pretty knowledgeable and pretty intelligent about their decisions here. And the fact that they were able to look at this and say to themselves, yes, we're willing to trade over our liquid asset right now for an asset that we'll receive back over the course of 4 years at only 51% discount. Now, some of you, at a 50% discount, some of you might say, well, a 50% discount is a massive thing. Sure, but maybe if Luna's been trading at 100 for like a year or something, and you have, it's been steady there. But I mean, Luna just went from 50 to 100 just a week ago. You know what I mean? Like, I had people in my Discord, asking me when it was at 90 or something, like, should I buy into Luna? And I'm like, probably not, considering the fact that it just nearly doubled over the course of 1 week. There's going to be a pullback, which inevitably did come. I mean, it didn't take a rocket scientist to understand that. And I'm surprised that the VCs also kind of hopped on this deal so quickly. But even putting that aside, the fact that they did it at $51, I mean, that is insane. But I'm happy to see that. I'm happy to see that even the people with the big money are looking at Luna, and more importantly, they see a future in Terra and in Luna and in UST 4 years from now. I think that's one of the biggest things to take away from this. Now, I get it. My channel is all about Terra. You would think that I see a future in Terra for the rest of my life and longer. And of course, we all do. We all do. But when it comes to crypto, I mean, we just do not know, right? There's so many unknowns that we are unaware of that it's even difficult to sometimes sit here and say that a year from now, Terra is going to be around. I mean, we could all hope so. I mean, I hope so, right? I own a bunch of Luna, but we can never tell that. I mean, there's no guarantee that it will. And we think that these VCs will be privy to information that people like myself and you are not privy to, right? And I guess based upon their findings, based upon their knowledge, I'll imagine also expertise, they realize it's a good bet, and they do see a future in Terra even 4 years from now. And I mean, I'm loving that. Now, putting aside that, I actually agree with the addition of Bitcoin and possibly other cryptocurrencies as a forex reserve for Luna. If anything, it kind of sets up like a backstop, It makes it a bit more sturdier of a stable coin. It does, kind of pull away from the whole algo stable coin that's kind of been going around. But I could also imagine that there might be legislation in the future from different countries. I mean, there's many already working at it that are going to try to disallow pure algo stablecoin. So maybe this is a way that Do1 is kind of trying to structure UST in such a way that it doesn't really function or doesn't look like an algo stablecoin would look like. Either way, still massively bullish news for Luna and for UST, and I'm happy to be seeing this. Now, if you liked my quick little rundown, I would appreciate a thumbs up. You could also subscribe for more Terra-related content. Any questions, leave them in the comments below. And other than that, thank you for watching and have a great day.